Hello and welcome to another episode of Keeping It Real, the largest podcast made by real estate agents and for real estate agents. My name is DJ Paris. I am your host and guide through the show. And this is our monthly Learn with a Lender episode series with Joel Schaub. So if you're new to the podcast, let me tell you a little bit about Joel. Joel is Vice President of Lending at Guaranteed Rate. He has been doing loans at a high level since 2003. That is 17 years, amazing, and has got to that level because of what he does directly for agents, which is that he gives back part of his commission to the buyer on every transaction. Now, last year alone, Joel gave back over $291,000 in closing costs to the buyers who worked with him, and that put Joel's volume in the top 1/10% nationwide for loan officers. Out of 380,000 loan officers in the country, Joel is ranked number 181. It's a truly remarkable accomplishment. Year to date, he has done 35 transactions for just under 11.4 million closings, which in and of itself is a big deal. But currently, he has 110 files that are locked and ready to close for 46 million in deals. This is just incredible. And we're so excited to have him on the show. Joel can be reached, by the way, at joel@rate.com. Again, joel@rate.com. Or you can always call him 773 or text rather 773-354-2049. Let's say hello to the biggest Cubs fan that I know, Joel Schaub. Welcome once again to the podcast.
Hey, DJ. Good to be back. It's really cool to actually have the video. I mean, check us out. I mean, I've always been told I have good hair, but look at you, man.
Joel and I spend an embarrassing amount of money buying hair clays and pomades, and we talk about this offline. But hey, someone's got to buy it, right?
It's not all real estate numbers. I mean, you and I do talk offline about hair. It's good for everyone out there to see us. So it's really cool what you're doing, man.
And we're lucky that we still have hair, right? Not everyone does. So we might as well, make it look nice. But no, I'm excited to do this one on video with you because for the last year and a half we've been doing this with you, we've just done audio only. So this is very exciting because I don't know that everyone's seen you. Of course, you're everywhere. So everyone does already know what you look like, but now they get to watch you on our show. So right now I want to talk about the biggest news going on right now in the lending world, which is refis. Refis are up because rates have come crashing down in an amazing way. So I just read that refis are up, just to let our listeners know in case I'm sure they all know, but just in case, refis are up 479% from a year ago. Obviously, there's been a lot of volatility in the market. There's been some corrections there. So obviously rates have dropped and refis have gone up. But even just from the last week, refis are up over 50%, which is absolutely incredible. So what is going on? Tell us what brokers, agents, realtors need to know.
Well, I'm glad that you brought me on. I wanted to actually just kind of break it down and give you guys the real scoop on what is going on with interest rates in the market. And so that you can talk intelligently to buyers and sellers and turn it into an opportunity. So this is all about giving back to the realtors and actually saying, I hear things are going on out there. I just heard a podcast with a lender. Now I know something, and it's going to help you get some more deals. So let's talk about it. I mean, we know that the markets are down, but what the big misconception is that the Feds cut rates, and so mortgage rates dropped. You've heard that, right?
Yes.
The Feds didn't call all the mortgage companies and say, please lower your rates by 0.5 point. I mean, it just didn't work that way. And they said it was a surprise cut, but those in the industry, we've known for a while that Fed cut was coming. We know that there's another one coming, and that isn't what necessarily drives mortgage rates, okay? Mortgage rates move on a day-to-day basis based on the bond market. The bond market had a crazy 10 days. I mean, just completely eviscerated numbers that we'd seen in the past. And so I'm a technical guy. I watch this stuff daily. I mean, I have it on behind me. I watch the numbers, and it's nutty. So just to give a little framework for everything that we're going to talk about, let's talk about where mortgages really come from, right? And then we can dig into the numbers. Right. And then we can dig into a couple of things if I'm a realtor that I'd be doing right now, okay? So back to basics. Before those Feds cut rates, they were on their way down. So last year we saw rates that were up into the what? Fours, DJ? That's what most people
Right.
had. That was great. Remember how hard we tried to get the 4.25 30-year fixed rate? We got it. We're in. Then it went lower. 3.99, 3.75. And then last week, banks started offering rates below 3.25%. And then they quickly jumped back.
Yeah.
What they found was with all of that demand, they didn't have any of the support staff or the money to lend, right? So you saw big brick and mortar banks literally put the skids on at the end of last week. Wells Fargo, for example, said across the board, their 30-year fixed rates shot to 4.25%. They said,
Wow.
basically stop requesting refinances.
Right.
Okay, literally. They wanted to stop the flow. They still were doing rates below that, but if you went to their website, that's what they were advertising to kind of slow down. For example, our company and a lot of them out there are doing the exact same thing. What they saw was in a period of 9 days, we took in just under $5 billion of rate locks.
Wow.
Right? There was a 2-day period where both days we locked in over $1 billion of residential mortgages. And it's a shockwave. That's a number that most mortgage companies don't do in an entire year. $2 billion of originations to do it in 2 days means that we have the staff and ready to go. So there's some things going on. You can't believe everything that you read as far as rates go. So I want to just give a little perspective, and then we're going to talk about how agents can benefit. Okay.
Great.
So what are you seeing? Because people are coming to you, DJ. It's not all about what I'm at. What are you seeing with agents and what are they telling you?
Well, it's funny. I don't hear as much chatter from the agents as I thought I would. And so I think this is a great call to action. Joel, the last time that we was on a month ago, he had spent his weekend contacting all of his clients because rates were lower and reaching out to his past clients saying, hey, it might be a good time to refinance. Let's look at the numbers. And, we implored all of the agents listening to our show to do the same thing. The news is now just hitting. Today's news cycle is all about refinances and rates. So hopefully realtors will be more tuned into what's going on. But I think a lot of them are so busy because it's that time of the year where things have started to pick up that maybe they're not paying as much attention, and they should be, because this is, and I think you'd agree, a great opportunity to do some outreach.
This is what I want to focus on. We could talk rates all day long, but I wanted to give 2 strategies if I was a realtor that I'd be doing right now so that I could go out and get more transactions. And it revolves around these rates, right? So the first thing is on buyer side, if you looked at a buyer last year that was on the fence and they were looking at a specific property, maybe 300 grand, call them back. That exact same property now is $230 a month less based on what rates they could get at their bank.
Right.
So let's just let that sink in for a minute. $230 less on the exact same type of property. It's huge. It's a real difference maker from having a rate that's in the 4.5 range to having a rate that's under 3.5%, 3.25. And so that's going to motivate people. They just don't understand what the rate drop means. But if you put it in monthly payment terms, if you're a realtor, so you go out and you just run a simple mortgage calculator. Pull up Google. You don't need to call a mortgage guy. It'll be hard to get one on the phone right now anyway. And just say last year on a loan size of $300,000, the payment was X. Now rates are down around 3.25%. You'll see that it's a really great talking point to go back to your old people or new people that are renting and say, let's go find something that is at or less than you're paying in rent. I have some data I can help you.
Yeah, great time to lock in especially if you're a buyer and looking and haven't quite yet found your property.
Exactly. So these are points as a realtor, you sit there and with all the news about virus and things that are going on, it's just like buying airline tickets. My wife and I bought the tickets to London for the Cubs game coming up. I mean, if we die, we die.
I was telling you offline, I'm planning with my girlfriend to go to Portugal, and kind of just lucky timing, I guess, or unlucky, depending on how you look at it, but financially very lucky because prices, flights and hotels, and obviously other tourist areas have been decimated by this, and it's certainly very tragic in a lot of areas. But for the consumer, it's been very positive. We now are going on a much nicer vacation for a lot less money. So Yes, great time to lock in those refi rates and talk to your lender. And also a great time to really partner with a lender as well, I think, and say, hey, I've got all these past clients, Joel, what can we work on something together to get the word out? I know you partner with a lot of brokers.
We partner with brokers and the refis are going to be there, but what most mortgage banks are doing is different than what my focus has been. I've been letting the agents know that while every other mortgage guy is out there just tackling refinances,
Sure.
I spent last night almost till midnight helping people get pre-approved, getting buyer pre-approvals. So just because the brick and mortar bank is where you have your checking and savings, you really want to partner with somebody that's actually dedicated to handling the purchase business right now. So I have two separate staffs of people that are, one is handling all of the purchase business. Okay. We have underwriters that are dedicated to it, and then the refinance. Okay. So a lot of banks right now, they're going to be so bogged down. I've seen it before, 60 and 90 days at a brick and mortar bank to get a purchase through because those lenders are just trying to push through all the refinances. Work with somebody that's actually going to be dedicated to your purchase buyers right now. This is where relationships are going to be make or break. Okay. All these agents still have business to do. And if you call your lender and they can't get on the phone because they're too busy just doing refinance business, find someone else.
Yeah, and I think it's important to note too, guaranteed rate, this is essentially all they do, right? Versus a brick and mortar bank that is handling all sorts of other ancillary stuff, checking, savings, investments, insurance, et cetera. And maybe the support staff isn't there, isn't quite ready to handle the influx of applications and refis. So guaranteed rate, you guys have, this is what you do, and you do it quite well. I've refied with you as well, and it's always been a great experience. I've always only hear good things about guaranteed rate, whether you're a new lender or a refi. The bottom line is you guys have the staff in place to do this.
Yeah, it's a mortgage driven company only. So instead of trying to sell checking accounts and savings and car loans to people, it's mortgage focused. So our dedication right now is for purchase business to close in 21 days for our realtors, okay? Where all the banks are going to skyrocket when contracts come through. Just call Joel. There'll be staff available, ready to go, just to do the purchase business for sure. And there is an opportunity to team up on the refi stuff. But the good news is rates are going to be here, okay? This is a situation that will normal out, okay? People ask me all the time, and they probably hear this, do you think they could go any lower, right? Could rates go lower? I have a 4.5%. The bank's going to give me 3.5 now. I think I'm going to wait. I think I'm going to wait a little bit and see. You never know where it's going to go. I think we're really near a bottom. And so the good news is that if the rates go lower, it's pretty easy just to ask your bank to refinance the loan even further down.
Well, and they, I think also it's important to remember, like, hindsight's 2020, right? And with ever trying to time the market, whether you're an investor and you're trying to buy, options or stocks or bonds, the smartest people in the world can't figure out how to time the market correctly. And this is also a point to remind our clients. Also, we're not trying to time the market. What we're trying to do is to possibly take advantage of where things are currently. And it's a great opportunity to just explore and see if it's a good idea to refi or to purchase. Obviously, rates right now are low, and things obviously could change. But it's a great opportunity just to make sure your clients know what's going on versus what they may or may not be hearing on television or if they're like most consumers, I bet they're not paying much attention. In real estate, we think everybody knows everything about real estate, especially lending and rates. Most people aren't paying attention. They have other concerns. They have their own lives. And this is an opportunity for realtors to reach out to their clients and start to educate. And what better way to reach out and provide value after a sale or even before a sale, before they're actually ready to buy or 2 years after they purchased, hey, I just wanted to let you know what's going on out there. I know you're a big fan of staying in touch with it for those reasons.
So here's number two, okay? If I was a realtor right now, what I would be doing to get more business. We've already talked about number one, which is educating the buyers about the rate drop, and not just rates, the payment. You don't write the rate on the check, you write the payment on the check.
Right.
There's no checks anymore. I'm dating myself. But you send the payment. If the payment's a couple $100 less, it means that I can either pay less, or I might be able to go into that next step up and be about the same payment. So that's one. Two, if I'm an agent, I'm going back to all of the listings that maybe expired or people that weren't ready to list. And guess what? With rates down, the pool of buyers is huge.
Yes.
I'm getting request after request for pre-approval. People are out buying. So what does this mean? It means that a listing right now has a greater opportunity of getting more people through the door, more offers, and a higher price. Okay. When the rates go down, the more buyers are out there. So if I had a listing before and they're like, I just don't think I can get this price, let's try it. Let's get it on the market. Buyers right now are looking for properties, and there's still a lack of inventory in a lot of places. So you might get lucky, you put the property on the market, and with rates being so low, you get 2 or 3 buyers that are willing to pay something that they weren't going to pay earlier in the year or even just 6 months ago.
Yeah, I think that's really important. So it's sort of a win for the realtor on both sides, the buy and the sell side, right? They're clients looking to sell. This is an opportunity to create bidding war opportunities because there's more, because rates are so low, cash is so much cheaper now. You have the opportunity to have more, like Joel said, the buyer pool is increased. And then also great opportunity for the buyer as well, who maybe wasn't able, if rates were significantly higher. Now is a great time to get them off the fence. Renters, Joel mentioned that earlier. If you're not educating your renters right now about and running an analysis, like Joel said, these calculators are everywhere online. You just run the numbers and say, oh, by the way, for an extra $100 a month, or maybe it's even cheaper than your rent, you can own a place pretty easily at this point. And if you're not doing that, I know for me, when I transitioned, this was a long time ago, from renting to buying, the only reason I knew to do that was I just thought about it one day and went, I wonder how that works. And I Googled it and I figured it out on my own. But if somebody would have guided me through that process, I would have been indebted to them, because I didn't know. I was sort of ignorant. I was completely ignorant on the home buying process and how mortgages worked. And I just didn't know. I had to educate myself. Don't let, and I'm a popular guy. I have friends, people like me, and not one person ever sat me down and said, hey, you should really be buying a property. And I eventually just kind of did it on my own. But don't let that happen. Lots of people out there aren't that familiar with it.
I built my business by being the educator, right? And teaching, right? So is your mortgage guy selling your buyers? Are they using closing techniques, or are they actually educating and helping? And so that's the number one thing that I always encourage my agents to do, is be the person who's educating. If you are providing value, people will continue to come back. So those 2 points there, it doesn't help just to call people and say, hey, rates are low.
Right.
But what? Rates are low, but what? What does it mean for me? What does it mean for the homeowner? Okay, for the homeowner that wants to sell their place, I probably won't have as much time on the market because there's a lot more buyers out there, or I might get a higher price because I could test the waters a little bit right now. I could put something up 10 or 15 grand above, 20 grand, depending on your market, or even more, and test and see. We haven't seen that in a while. We used to have these agents, and I was not a fan of what I just proposed. I was always a fan of list it for what it's worth and get a lot of offers. Now there's an opportunity to literally list something a little bit above, or maybe even a lot above. Buyers are going to go out there. They're going to say, wow, I can afford that place for this payment. So I'd be going back after the buyers that I haven't talked to in a while and explaining to them about payment. And I'd be going back to any of the expireds or on the fence listings and explain to them that I can be the guy or girl to list your property right now. And I think we can get X for it because buyers are out there and rates are low. So now you're providing some value, and that's what this is all about.
And you just said something really important, and I want to just circle back to it. And I'm not sure in all the different episodes we've done if anyone's actually made this exact point. So I want to make this really drill down on it just a little bit, because I think it's so helpful. So Joel just said something very powerful that many of you might have just glossed over, which is, he said, calling expireds, right? So for those that are realtors in this industry, expireds, for sale by owners, these are listings that are sold. These leads are sold to realtors all the time. So what happens on an expired listing is that homeowner is going to get called by a ton of realtors, all pitching why they should relist with them and why their marketing strategy is the best, and why they're the best realtor for the job, and the past realtor just didn't do X, Y, and Z, and this is what they're going to do. And okay, that's all fine. But what Joel just said was very interesting. What if you call those expireds and said, hey, this is a really good time to relist. And yes, I'm going to do a great job for you, but I want to explain to you why it's a good time to relist. That is such a different conversation than most of these expired owners are going to be, those calls they're going to be getting. This is a very unique call, and it's number one, it's true, and it's educating at the same time, and it's going to endear you to them because you're going to say, just so you know, here's why I'm calling. Yes, I would love to get your listing, but I want to explain why it's a good time to relist, whoever you choose. And that's such a big thing. So I just wanted to honor you for that, because that was a big tip that you just gave people.
Most agents call and they say, me. This is why I can do something, right? Yeah. And so you just got to flip it and be the reason that people are motivated is that you've given them some value or you've educated them on something different. And so that's the approach right there. Going back and saying, why? What can we do now and why am I different? Okay.
Oh, Joel, I forgot to mention, we have a question for you, believe it or not.
We have a caller calling in now.
We don't have that.
Okay, let's hear.
But we do have a question. This is our first question that we've received from the Jersey Shore, believe it or not. Now, this is what the person said, they were from the Jersey Shore. So, and I have been to the Jersey Shore, and that is a fun place. But the woman's name, I actually don't have it, but someone from the Jersey Shore emailed us earlier and wanted to ask you specifically, because she listens to the show, and she said, Joel, do you work with clients nationwide? She said she knew you were in the Chicagoland area. You were geographically located here. Do you work with all states, or are you only focused in Illinois?
So as an employee of Guaranteed Rate, it gives me a lot of opportunities. So we're licensed in all 50 states, and I personally have 11 states and counting, okay? So depending on where they are specifically at, I handle all the high-level stuff. I have the conversations. So if there's any state, we're lending there. So it doesn't matter. I have somebody that would be specific on my staff that would be in a specific state. So yes, if it's out of state, we are definitely able to take that. And most of our out-of-state stuff is at 250 and above, okay? So a lot of people call and they go, I got an $88,000 house. And in my hometown, that's a pretty nice house. I grew up in Michigan.
Sure.
But for out-of-state deals, we have to have some kind of cutoff. So I would have somebody else handle the ones that are smaller and just for efficiency. The short answer to that question is yes, we're in all 50.
So if you're a realtor out there, or you might even be a buyer, a seller, an investor, great time. Investors are going crazy right now because rates are so low. They're obviously buying more properties. But if you're a realtor or a consumer looking for a lender, Joel can handle all 50 states. And if he personally can't do it, he's going to pass it over to someone on his team who's equally qualified and going to take great care of you. So please, Joel, we should actually talk about that. What's the best way that anyone listening to our show can get in touch with you in case they're looking to have that conversation?
Well, if it's realtors and they're looking to actually have a partner to help their buyers get pre-approved, I am taking on new agents, and that's fine. We would build a relationship together. And so we've done this before. And a lot of people out of state right now, I've had real fruitful conversations because of this show. And it's the same thing that we did last time. It's an email, and it's literally joel@rate.com. So JOEL@RATE.com. Subject line, keeping it real. and then inside it'll say, I heard you on the show, let's get a conversation going. And then I'll schedule a phone call. I'll learn more about what you're doing as an agent. And we do a lot of different things to help agents grow. It's not just them sending us deals. Okay. There's a lot of RESPA compliant co-marketing where I have thousands of dollars a month that I'm helping agents promote broker opens and open houses and flyers, et cetera. So there's a lot of opportunities if you're working with the right lender, whether it's me or somebody else, get them to contribute, get them to help and grow your business. So that's the part of it on any of the agent focus. because even though rates are low, my focus here isn't just refinances. My focus is making sure that agents have a lender that'll actually kick butt for them, pick up the phone even when they're slammed with other things, and actually have a partner. Okay. That said, if you want to do the refinance, you could literally say, keeping it real, refinance quote, and then I'll send a link and we can go through all the different options for refinances that is eligible. So we send an online application, 8 to 10 minutes, and I'll be able to run quotes for you guys to select from.
Yeah, and I want also everyone to understand too that this is not a paid advertisement for Guaranteed Rate. We are just huge fans of Joel, of Guaranteed Rate. We were looking when we first started our show, we wanted to partner with a lender that could provide benefit for our listeners. And Joel's the obvious choice. We're so honored to have him because he literally is that good. So if you're current relationship with your lender isn't very strong, if you're looking elsewhere, we would encourage all of our listeners and viewers now to check out Joel. Visit him, email him directly at joel@rate.com. Easy to remember. And you can also text or call him directly, 773-654-2049. Please also understand, this is maybe the busiest Joel's ever been in his whole career, or certainly of the busiest time, but he is very, very quick to respond. But I understand it is a crazy time for you. So for people to reach out, Joel will get right back to you if he's not immediately available. But he's always available, and he's always willing to do this show, and we're really honored to have him. So Joel, on behalf of the audience, again, thank you for your continued support of our show and providing a tremendous amount of knowledge and awareness to the broker community and also consumers about what's going on out there. And for all of our listeners, we encourage you to reach out to Joel as well for all your lending needs. Also, we could ask everybody to follow us on Facebook. Couple of good reasons why to do that. Number one, we post every day one article designed to help brokers grow their business. We scour the internet. We look for only articles that are high quality about teaching realtors how to grow their business. We post that. In addition, of course, we post all our episodes, but we also broadcast these episodes live. So right now, as you're listening, if you're listening through a podcast app, a couple of weeks ago, we actually broadcast this live on Facebook. So you can follow us on Facebook at facebook.com/Keeping It Real Pod. And please, one more thing, tell a friend. Just think of one other real estate professional that you know that could benefit from listening to people like Joel and all the other great guests we have, and send them a link to the podcast. You'll be helping us in just being able to do more episodes for everyone. And so Joel, once again, thank you. We will see you next month. And who knows where things are going to be then, right? It's a crazy time.
Well, I'm glad that we came on, and the whole focus here again is just making sure that agents got something out of this, that they actually can go out and use those two techniques to get more closed transactions in the next 30 to 60 days, because the opportunity is there. Instead of being paralyzed with fear of how do I move forward, those are two real strategies to go back and get more deals. And then before we go, just if it is a refinance scenario, I always want to bring up the best way to go back to your own lender, okay? So it's not just coming to me. If you have a good relationship with a lender, remember there's always two good options when you're looking at refinancing. It's asking them what the lowest rate in the market is, which they would love to give you because you're going to pay them fees, right?
Right.
And say, well, what is the rate that I could get if you paid all the fees for me, okay? In this environment, rates have dropped a lot. So if you're in the fours, the banks want you to call and say, give me that 3.25%, because they're going to charge you the fees.
Right.
Well, what would happen if the rate was 3.5 and there were no fees? That's a pretty good deal if I'm going from 4.5 down to 3.5 and the bank's paying all the costs. So be careful. Don't just go calling everyone looking for the lowest interest rate. Make sure that you ask, what is the rate on a no cost refinance? And then just do a little bit of math. And that's another good tip for everybody out there, okay?
Yeah, don't be a rate chaser. I think that's important. I was doing this recently with just some cash I had sitting around, and I subscribed to a website that every month sends, here are the best money market accounts and savings accounts.
Yeah.
And I saw one that was 20 basis points higher than my current rate. And I thought, oh, well, that's free money. I'm going to just chase the rate, go to a new bank and transfer the money. It should be easy. And it was so difficult to do that I ended up giving up. And I went, you know what? I'm keeping it where it is because it was such a challenge. And I learned that lesson that, chasing rates, while wonderful and great, and if you can do it, awesome. But you want to go with somebody that can get things done for you. And this bank ended up not getting any of my business because they made it so difficult for me just to move cash. Guaranteed rates not going to do that. Obviously, they're not in the savings and money market business, but they're not going to do that with respect to your loans. They're going to take care of you, and they may have the lowest rates, they may not, but they are going to get the job done, and that's the most important part. And the relationship is everything. And Joel has, if you're in the Chicago area, you already know Joel. He has an amazing reputation. If you're not in the Chicago area, we encourage you to get to know him. So reach out to him again, joel@rate.com, and he will take care of you. So Joel, thanks again for being on the show, and we'll see you next month.
Okay, looking forward to it. We'll see you soon.